But actually, Friday was, it seemed a bit out of the blue, right? It was not as if global markets were indicating a large cut or anything of that sort. We sold off 1% all told.
Yeah.
But you know, you usually used to 1% up, not 1% down. So I think that is the bit. Just a couple of points here. So buy close today, and you know, don't read too much into it because we've got a big data point, and all of it may change on Monday. But the fact is, buy close, just price action-wise. The Nifty at the day's low tested the 20-day moving average and then almost tested, I mean, missed by about 30, 40 points, and then bounced. The Bank Nifty is ended below the 20-day. Sometimes, I mean, these act as short-term reversal levels. We'll see. Global market, and I've been saying this for the last 2 weeks or so, the mood has turned a bit more cautious. And there's lots of reasons, but I think the most widely cited sort of talking point, of course, is seasonality. This time of year, especially in an election year in the US, there is, I mean, it's a very clear trend. Markets go into the election a little lower, and then, of course, you know, they do what they do after. So from here all the way till November, that's one of the reasons. There are others as well. I just noticed one more thing. The dollar JPY, right? I mean, we all forgot about the yen after that mini episode in early August. The dollar JPY, if you look at what it did today, it's back at almost the August lows. I mean, the USD JPY, which means the JPY is at the highs. So 141.7, 142.2. These are the levels to watch. This is basically the high that the yen hit, and then, of course, it reversed back to about 147, 148. The same reason does not cause another, I mean, similar kind of reaction in markets, but sometimes, you know, it does, maybe to a lesser degree. Will it cause another round of funding stress? I think that's something to watch from a global arena. Of course, I mean, the big one later today, as I started by saying, why all of this may reverse, and we'll see, is the jobs data, which comes out later today, around the time that the US markets start to trade. So, I mean, the ideal perfect scenario is going to be a slight beat. Not too cold, not too hot, a 25 basis point cut, and then, you know, life is not so bad. So we'll see.
If only you were the, you know, Fed governor, you've laid it out perfectly what the markets want. But Nimesh, there was that SEBI angle also, right, on FPIs?
Yes, but you know, I would say don't read too much